Good day. Welcome to this What's Up with the Markets session. We are again going to, if you're wondering what's happening in the markets, we're going to look at updated data and particularly with indices and some commodities today. We're going to add commodities to what we didn't look at a couple of weeks ago. Now, before I get into the session, I have to tell you that everything we cover here today is of a general investment advice nature. This is not specific or personal advice, and that you should not allow past performance to be an indicator of future performance in any of your analysis and decision making you make here as a result of watching the session. Now, I'm just going to move we're just going to go over to share a different screen and look at the chart. So there you should have the chart of the Dow Jones Index. So we're going to go through the American indices and a couple of other indices. We're going to do some breadth of market analysis, and a little bit of sentiment analysis. Then we're also going to have a look at the commodities, CRB index, gold, and a couple of other commodities, and then we'll end it there and have a question and answer session like we normally do. Now, the last time I did this session a couple of weeks ago, the Dow Jones had not given an entry signal, so we can see that green arrow there, which is an entry signal on the index, a mechanical rules-based index signal, and was underperforming the S&P 500 and the NASDAQ for that matter. And we can see that down the bottom here in this relative strength chart. That's that blue line, declining blue line, tells us that the relative strength to the S&P 500, you can see bottom left over here, is that the Dow Jones is underperforming the S&P 500. But it's had a clear breakout above this resistance zone, this blue rectangle resistance zone, and has had a pretty sharp run up, a little bit of catch up mode. You can see just at the end over here, there's a little bit of an uptick in the relative strength chart, a little bit of catch up, but this is never, no lines in the stock market or any indicators you look at are straight lines. That doesn't mean it's going to continue to outperform, but this is now a confirmation. We've got all three indices rising. When we looked at these charts a couple of weeks ago, we only had the S&P 500 and the NASDAQ had breakouts, but the Dow Jones was languishing, those two. So we have that confirmation. All three major indices in the US market have now had breakouts. We won't do it in this session, but in other sessions we will look at the S&P 600 and 400, the small cap and mid cap indices, and see how they're going, but we'll do that in another session. Right, let's go next to the S&P 500. You can see the entry signal, the rules-based entry signal occurred much earlier, way back here with this green arrows, and the breakout of above its resistance zone was back here, which is, you saw the big rectangle on the Dow Jones. That was its resistance zone. This resistance zone was much earlier in the time frame, but we had a little bit of resistance over here, which was the same resistance the Dow was experiencing, and we've had a clear breakout, strong breakout, shallow dip, another green right at the very end over there. I'll just zoom in a bit. Another green bar over here, and that is continuing this uptrend. Put a channel in there, so it's behaving on that channel. Now, the way I draw these channels is for an uptrend, I connect troughs in the short, whatever time frame you're looking at. I connect troughs, and then I do parallel lines, and I typically have the three lines with a median dotted line in the middle, just to mark off resistance areas. So the S&P 500 rising and at a pretty steep gradient. Sorry, the other thing that I should look at while the chart changes is that notice how the gradient has changed. The gradient of the red channel had changed. Right, breadth of market indicator. This is the cumulative new highs and new lows, and you can see that it's kind of line ball down the bottom over here. If I zoom out a bit, you might be able to see a bit more we had that down. You can see the cumulative 52-week high, 52-week lows was falling, and it's flattened out. Certainly not at the gradient. We want to see something more like this. It's never really a steep gradient. The cumulative new high, new low, breadth of market indicator has flattened out, but we would like to see this rising a bit more. And you can see here that the blue line is the S&P 500 itself. So pretty strong whoops, wrong one, pretty strong uptrend that's occurring there. The other breadth of market indicator that we look at is the cumulative advanced decline. That's looking at all of the New York Stock Exchange stocks, and we're looking for a divergence here as potentially a change in direction, but we don't have that at the moment. We have a rising cumulative advanced decline line, which is supporting the rising market. So that's bullish. What we're looking for as a sign, if you like, for a potential top is this sort of thing where the market's rising, but the cumulative advanced decline is falling, not happening at the moment. Next chart is we're going to look at is a sentiment indicator. This is where we compare the consumer discretionary to the consumer. Sorry, not that one. We've got a different one. We've come up first. The chart took up a bit longer because I've added some data to this. The sentiment indicator comes in a mile. This is another breadth of market indicator. This is looking at the number of stocks in the S&P 500 that are above their 150-day moving average. Now, I've compared to sessions I've done in the past, I've now inserted the chart of the S&P 500 below here. So it's a second chart. And I've lined up just to go back and show you the historical data, you can see I've lined up the troughs, which are these green vertical lines, to where there are troughs below this oversold 15% level. So eyeballing, this is a subjective technical analysis, is showing that when when there are less than 15% of stocks in the S&P 500 below this below 15% or 15%, when they get down to these sorts of areas, you're in oversold zones, and that kind of ties in with dips in the market or troughs in the market. Of course, it's not predictive because you don't know how long it's going to stay below there, but you could, as a confirmation breadth of market, bringing into any other analysis you do, you could look for a cross above the 15% line to say, okay, this is potentially a high probability time to get into the index, because it's really looking at the index. One of the things that this does not show you, although I do have an overbought zone over here, is that the correlation of overbought, when you get above 85, 90% of the stocks being above their 150-day moving average, that's not necessarily an overbought zone. It's not as good an indicator of a trough being formed. And you can see over here, here's a peak, but the S&P 500 continued marching on for quite some time. And the peak was eventually found over here somewhere. So not a good correlation for peaks, but certainly has a high correlation for troughs against the index as a breadth of market indicator. So that's heading up. It hasn't got to an oversold zone yet, and it's not a great indicator of oversold, but there's still more room to go to get up to 80-85% of stocks above their 150-day moving average. That's an indication that there is breadth of market. Now, this is a sentiment indicator. This is comparing the discretionary consumer spider sector to the staple consumer sector. And the chart I look at over here is this. This is a SIROC, a smooth index rate of change indicator, against the relative strength between the two sectors. And so when we've got an entry signal, if you like, it has a pretty good indication. This is not 100% perfect, like no indicator is, but it's another weight, another weighting of indicator that you can bring into your sentiment analysis, breadth of market analysis. And of course, what I really always truly believe in is the raw price action, which should be the ultimate decision maker on what you do in any given situation in the market. So here we have the SIROC rising, and this is a correlation. So this is the S&P 500 at the bottom over here. We can see that's rising, but this relative strength line, when it's rising and it's blue, it means that discretionary consumer is outperforming staple consumer, and that's typically a bullish period in the market. So that's giving a good indication, and it's confirming that we were in a primary bull market within a secular bull market at the moment, and we were in a secondary bull market as well. So we've got all three lined up, which is a good type of market to be in. Just looking at the volatility index, which is another indicator of volatility. Typically, bull markets enjoy low volatility and bear markets high volatility. So you can see we're down at pretty low levels here. We haven't been to these levels since 2019 when volatility was this low. So a good indication, again, a confirmation of a bull market that we have, confirming the breakouts. Right, let's have a look at the NASDAQ. NASDAQ has been outperforming, so that what I typically do is at previous all-time highs, I put a black resistance zone. So we're some way away from that black resistance zone on the NASDAQ. We had a bigger retracement on the NASDAQ than the S&P 500, but this breakout occurred. There's the entry signal on the NASDAQ going back to end of January 2023. So it had its breakout before the S&P 500 and well before the Dow Jones as well. And that breakout zone of that resistance zone, the blue rectangle over here, aligns with the blue rectangle I showed you on the S&P 500, and also the larger, longer term rectangle on the Dow Jones. So breakout occurred here first, S&P next, S&P 500 next, and then the Dow has now confirmed that as well. So a bit more of a volatile and a bit more of a steeper gradient. You can see, same as the S&P 500, the gradient of the trend has changed to steeper. Another good indication that we're in a primary bull market and within a secular bull market. So this, in the United States, it's all systems go. And portfolios, whether you use a rules-based system or whether you are a discretionary investor, we should be fully invested in this type of market, and should have been for some months now. And if you haven't, well, then you really should be looking at your processes, either your analysis process or your mindset as to why you are not. Bottom chart over here shows that the relative strength line compared to the S&P 500 is that the NASDAQ has been outperforming the S&P 500 for some time. And so the analysis is confirming what you're hearing in the news. Breadth of market indicator on the NASDAQ. There, just an example of what we don't want to see, which is divergence, where the cumulative new high, new low is falling while the NASDAQ is rising. That was obviously in the downtrend. Now we've got this uptrend, NASDAQ rising, and this cumulative new high, new low, breadth of market indicator starting to rise. And on the NASDAQ, it can get a lot steeper than that. So we're still looking for that breadth of market, which is indicative of an early bull market, if you like. It typically gets steeper, the gradient of those breadth of market indicators, as the market gets stronger. Now, this is also looking at this is the NASDAQ 100. We don't have the equivalent for the NASDAQ Composite, but the NASDAQ 100. This is the number of stocks of the 100 that are above the it's simple 150-day moving average. Aligns well on troughs, but we're sitting at 82% over here. So most of the stocks in the NASDAQ 100 are above their 150-day simple moving averages. Breadth of market is good and really confirms the bull market that we're having. Just looking quickly at interest rates. This is the 10-year Treasury note on the US. We have, when we last spoke, said we've got a descending triangle forming here. There's the baseline, the blue rectangle, and we have lower highs here. Did have a breakout. And what I did say to you at the time is that this could be a continuation pattern of the uptrend, which is the black channel line in here. It's quite a strong continuation pattern. We've had a breakout to the top side. So we don't know at this stage whether the descending triangle is holding sway over this which is a bearish pattern, over this falling wedge, if you like, that is typically a continuation pattern. So we had a false breakout back into the range, and now we're playing around on this upper channel line over here, which is touching those two previous peaks there. So it's it's a confirmed channel. So we're keeping an eye on interest rates, and at this stage is indecision in that market. Okay, just a couple more indices to look at, then we'll go across into commodities. This is the messy chart of the All Ordinaries Index. Let's just look down here first. This relative strength line is telling us that it's quite seriously underperforming the S&P 500, which is quite obvious. Getting go ahead in your portfolio in this choppy, sideways, wide-ranging market we've had on the Australian market is quite tough. but we have had some go ahead on the and this excludes dividends, which is just, so this is just the cash index, and I've been looking at cash indices on the other indices as well. But if you look at the accumulation index on the All Ords or the ASX 200, it's a different story, just because dividends play a much bigger role in the Australian market than in the US markets. But on the cash index, let's go back, let's get apples and apples comparison. Our market is severely underperforming the S&P 500 here in Australia, but we do have an entry signal that's occurred, pretty choppy price action here, and we have had a breakout of this downward channel, dropped twice into the range here, because I'm using the early peaks that formed this upper line, and it is parallel to these other channel lines which I've had in place, the black downward trending ones, for some time. So it all ties in nice and symmetrically on those peaks, two breakouts back into the range, and now a breakout again. So we need to see if this breakout is confirmed, and if the Australian market continues up and thereby follows the US markets. So we'd like to see this relative strength line over here to comparing to the S&P 500 at least flattening out and starting to match the S&P 500, but we're not quite seeing that yet. Last one I want to look at is the BVSP, which is the Brazilian index. This is indicative of it fits into one of the resource index, but also is indicative also of what emerging markets are doing. I didn't cover this index last time, but it has been wide ranging as well, typical similar to the Australian market, where the peaks were back here in April, May of 2021, which is when the Australian market peaked, and we've got the sideways moving market here, but a little bit cleaner than the All Ordinaries. There's been outperformance over here of the S&P 500, just broken down a little bit. They're starting to go up again. I could change this trend line, but I'm just joining the two early troughs here. But gave an entry signal on our mechanical system way back here in April, and that's a pretty steep trend. So just indicative of what's happening in the emerging markets and also in another resource-based index. And hopefully that will follow through to other resource-based markets, such as the Canadian market and the South African market, who I know people are watching this from there as well. Okay, I'm just going to quickly go over to commodities, because we have had a little bit of a breakout. Now, this is the CRB index, so this really has a range of commodities that make up this index. This is a weekly chart, and we can see the downtrend there's a breakout here of this downward trending channel. That's pretty typical of a pretty strong market, a retracement, and now a breakout. So we'll see what happens. I also trace this against the S&P 500. So there was matching, there was outperformance the S&P 500 now, and there's been underperformance of the S&P 500. So what we're looking for here, from an analytical perspective, is for commodities to start outperforming stocks. And that then typically would see the resource-based stocks starting to act. And you may have seen this already just in the last few days of what's happening in some of the resource-based stocks in Australia, with entry signals into Fortescue, and yesterday in particular, the resource stocks basically holding up the whole market. Next, I want to look at gold. Gold has had a breakout. First of all, underperformance. So gold is underperforming equities, although there was outperformance there for quite some time. In 2022, when the equities were falling, equities started rising. Gold hasn't matched and is underperforming. Have had a little bit of a breakout of this downtrending channel over here. Nothing confirmed yet. I've drawn in here a gray channel, a bit of a different gradient. So there are two peaks that I've joined there, and now I've gone and joined this peak to see, looking for a breakout, just using a trend line, an upper trend line, to look for an early breakout and a confirmation of this breakout of the darker black channel line over here. So we've had a higher high. In fact, you could go, there's a peak there, higher trough than that one, peak. And at this stage, it looks like there may be a higher trough forming over here. So maybe early stages of gold starting to move, but nothing to write home about there at all. Silver is, so the bottom chart over here is comparing silver to gold. Much of a muchness being pretty much the same. Sure, not a straight line going sideways, but this there's a symmetrical triangle forming over here in the relative strength line. And so typically what you look at with silver is when silver starts outperforming gold. So the relative strength line and the relationship between gold and silver is an important one. And if this blue line over here starts rising strongly and silver starts outperforming gold, then there could be some makeup and opportunity, but it's indicative of money moving into commodities and hence the commodity-based stocks as well. And it's also indicative of a stronger economy as well. And it's forward-looking on all this talk about recession and poor economies and things like that. So looking at these commodities is quite important, and especially when you start looking at this one, which is copper. Copper had this strong run-up from a very low trough down here, has been moving sideways within this band. That black resistance line at the top there signifies the all-time high, but it is in a downtrend. So I've got that channel in there, pretty strong channel, with touch points on the upper and lower channel lines, quite strong, a number of touch points. Now, when I'm drawing down channels, remember I said when I'm drawing up channels, I look at the troughs. When I'm drawing down channels, I look at the peaks of the declining peaks and then join that up and then make my parallel lines. So we are close. We're bouncing along this upper channel line over here. No breakout yet. But none of gold, silver, or copper that I've looked at so far are really contributing much to the CRB index, which is the first commodity chart we looked at. The one that is contributing quite strongly to the CRB index, the Commodity Resources, or it used to be called the CRB, the Commodity Resources Bureau, I think it's just an acronym now, is this breakout over here in oil. So this is Brent crude oil. I'm not going to look at the light sweet, but it is in the package. If people want, you can go and have a look at it and be on charts. But you can see we've had this underperformance of against the S&P500 here. So S&P 500 fell in 2022. Oil fell by more. But there's a clear breakout here out of the channel and out of this support zone over here. So bouncing off the support zone, and we'll keep tracking how oil goes, because rising oil prices certainly won't be good for the economy. Now we quickly look at Bitcoin and Ethereum, keeping an eye on that uptrend over here. So there was the breakout out of the down channel. We got caught. We're still in this trading zone over here, but have met pretty strong resistance at this really key support zone at around about 30,000 US for Bitcoin. So support, resistance, still resistance. Resistance has failed to break through the resistance here. We're still above, we're still in the up channel. And the next thing over here is to see if Bitcoin finds support in this upward rising channel. And you can see that after underperforming the S&P 500 in 2022, so S&P 500 going down, Bitcoin going down by more. Therefore, the declining blue line, rising blue line over here says that the Bitcoin is now outperforming the S&P 500. And it's a sentiment. It really is a sentiment index, if you like, at this stage. And I know there's a whole bunch of other things behind Bitcoin, but really it's one way of looking at it in terms of what the wider market's doing. But Ethereum is also at that, its support resistance zone is quite clear here. That's the one that lines up, and it's around about 2,000, lines up with Bitcoin, finding resistance here. Okay, I'll put a channel line in there for the next time we meet, but hasn't broken out yet. So what we're looking for here is for these markets to advance, the cryptos markets to advance, is breakout above these levels and then onto a strong support for those breakouts and price rising. We're not seeing that at the moment. Right, a quick look at uranium. You look at the change in trend in uranium here. All-time high way back in 2011, I think it was. No, 2007. Very weak. There was a basing over here, quite a strong basing, higher lows, gradient, upward sloping, and now we've seen a steeper gradient in this bull market in uranium, bouncing along the lower channel line over here. So if the trend continues up, you could argue in this upward trend, it's weak at this stage and could get stronger. And of course, you could, there's the URA. The URA, I think I've got the bottom chart. Yeah, so the URA is the ETF, and it doesn't track the price very closely. If it tracked the price very closely, you'd more or less have this relative strength line here between the uranium price and the URA being more or less a straight line going sideways, but it's not, which means that it sometimes the ETF outperforms the price of uranium and sometimes it underperforms it. Iron ore, which is one to keep an eye on for large stocks here in Australia, massive run up, downward trending channel, which has lasted from July last year. So this is a year long it's taken here. Two top peaks, touch points there for the downward trending channel, and a breakout back down. Now this is a pretty volatile bit of price movement. This is a weekly chart. Is back down onto the upper channel, finds support there, now rising. So for a textbook uptrend or change of trend to happen here, we need to see higher highs and higher lows, move up to this resistance line, and then a breakout out of that resistance line. So I've also drawn another faint, you can see a faint gray there where I've joined those two peaks, and that I use to see a breakout of that. And eventually we can redraw the channel, but we would also be putting an upward slanting channel on here when we get another trough forming somewhere. But the breakout has occurred there, early days, indecision happening when you have these breakouts, and then retracement to the channel line, and then an upward move. So we just need to see where this goes. And I think the last that I'm going to look at is thermal coal. We put a video out on YouTube about Whitehaven and how that could have been traded over the last few years. But also LinkedIn, our coal stocks that follow this, particularly Whitehaven coal. We've had this retracement. It's a 78.6% retracement of that run up from 2020. It was a decent run up. We've now had the retracement. 61.8 is there was a little bit of support found around about that mark, that retracement mark, but come all the way to 78.6 now on this pretty volatile price movement to see whether support is found here. There's also a longer term support zone with this blue rectangle over here to see if support holds there, and whether there's a breakout above this pretty weak channel line, and see where it goes. But there's a little bit of sideways movement, and we can follow that to see how that translates into coal stocks. Right, I wanted to leave it there in the interest of time and move to questions. Let's just get chat up and see if we have any questions. Otherwise, I'm happy to leave it to next time, or we certainly can go to this video is going to be put up onto YouTube. We're going to use that as a place where you can answer questions, and we will comment there, and we can answer from there as well. So any questions at this stage? Right, from Nalini, how does the Fed decision tomorrow affect the bullish nature of the market? Okay, let's talk about variables. It's just another variable, and certainly in the short term it will have an effect, there's no doubt. How short term that is could be from minutes to days to weeks, but it is a variable. And when these big when these variables, and there are some during in between announcements, it becomes not as big a variable. When there are announcements made, people will be watching it, and the market will react one way or the other, surely. But it's just another variable of millions of variables out there. And so what is the market going to do? Well, when you have a method, a system, a process, a plan in place, then you don't allow the noise to affect your decision making. So, and in that environment, you don't become forward looking. You don't form opinions and views of what may or may not happen, because that really is just it's just a fool's paradise. Because you don't know what's going to happen, and the more you subscribe to the fact that you don't need to know what's going to happen next in order to make money in the market, the more liberating it is to let what happens ever happen, and then to actually go back to your interest in the market, whatever area that is, and look at your unambiguous signals, your unambiguous criteria that you've pre-researched to see how you react. And you shouldn't override those in any situation whatsoever. Otherwise, you just knee-jerk react and become inconsistent and subjective, and you get pulled from pillar to post, and then you have no process, you have no system, and you're effectively open to which way the wind blows. So yeah, I don't even look at these things. It doesn't matter. Whatever the announcement is and however price reacts, if it's short term and they have a couple of red down days, a couple of red bars or candles, who knows what's going to happen after that. If I don't get an exit signal from the stocks that I hold at the time, then I just do nothing, which is very liberating, because the decision is already made for me. It's pre-researched and pre-made for me in my decision support system. So I just follow my decision support system, and therefore I don't have to form a view for what every variable does in the market, whether it be interest rates, whether it be the Fed announcements, whether it be a politician, whether it be a war, whether it be whatever it might be, because we really can't predict how the market's going to react to any of those variables moving. Okay, from Rob, can you please tell us when you see the major buy signals like 2 to 3 months ago? Rob, I don't need to tell you that, because the system tells you that. And just by following the process is effectively when you react to it. So those signals on the indices that I showed you in the Dow and the S&P 500 and the NASDAQ happen in the software and also on the app, on the smartphone app that you all have, or that our customers have. We do send out emails only when there's a change in market risk for SPA3 Trader. So when SPA3 Trader, and that typically for the US market is when the NASDAQ has an entry signal, so that's when that will go out. And when the All Ordinaries has an entry signal, then there will be an email go out to our customers. Those are the only two notifications we do by email. Otherwise, we leave everything to the app and Beyond Chart software to give you those notifications. Okay, Bob saying, I don't subscribe to the US data. You mentioned that we should have bought a long time ago. Is it too late to subscribe now? No. Well, I don't know what you mean by subscribe. Sorry, Bob, I don't know if you are a current client or not, but if you are, then you would still get an entry signal on the S&P 500 and the NASDAQ, even though you don't use the US data. So you would still get that. And certainly on the All Ords, you would be waiting for that. But you obviously wouldn't get entry signals on US stocks if you don't subscribe to US data, because you still get the S&P 500 and the NASDAQ as part of your Australian data feed. Any other questions? None at this stage. I'm going to try and keep these sessions to half an hour, so roughly 23 to 25 minutes, and then 5 minutes questions. So any other questions, please, when we post this recording will be posted to both the Education Center and also to YouTube as well. So please subscribe to YouTube and click the bell for notification. That's another way you'll be able to get notification of these recordings going out. And there's a bunch of other stuff, other learning material that we're going to put we are and will be putting on YouTube. And that just means that there's one layer less of security for you to get through. You don't have to get into Kajabi and the Education Center to watch these updated sessions. Okay, thanks for that feedback, Rob. Well, that's great. So we're going to keep doing them. So the idea is we're going to do these every 2 weeks now and do a shorter session every 2 weeks rather than doing them monthly. And we are also going to, if there's a breakout or some big event happens in price action in between intra 2 week periods, intra fortnight periods, I'll hop onto a camera and I'll just do a quick update and keep those to 5-8 minute, but only if there's something major happens. So most times intra the 2 week, there'll be nothing, but if something happens that I think is important, I'll hop on and just give an update to what's happening in the market status of both the US and the Australian markets. Okay, question here from Carl is, what is the trend of AUD to USD? We can certainly quickly go and look at that. So the US dollar is, well, put it the other way, the Australian dollar is underperforming and in a downtrend against the US dollar. There we have the downtrending channel, and I've just joined those peaks over there. and put median lines in here. So that's also quite a strong median line touching peaks over there. So this is in a downtrend. We've had a couple little breakouts along the way, false breakouts, but then the trend has broken down and not continued. So not looking good, the Australian dollar against the US dollar at this stage. And if we have a look at the US dollar is also and this is the basket. So the dollar index, US dollar index, in a retracement at a support zone over here, fallen below that, and is having lower highs and lower lows. So the US dollar showing weakness against the greater currencies of the other currencies. Just to finish on the Dow Jones, probably the chart of the session, carrying on from my session 2 weeks ago. That's a clear breakout and a confirmation that we were in a primary bull market within a secular bull market. So those who trade, we really should have exposure to equities markets at the moment. So it's risk on. Okay, thanks for that, Andrew. Thanks for that confirmation. Well, we're certainly not going to stop doing them. We'll end the session there, and we'll have another one of these in 2 weeks' time. See you then. Until then, I wish you consistent and objective investing.